The official September jobs report from the government stuck in the mud because of the shutdown. That's due out Friday, but will be delayed now. And Doug Flynn, never delayed. He's here right on time, certified financial planner and co-founder at Flynn Zito. What about this from ADP? Seems to me would be even more closely scrutinized with the BLS number being delayed. But, you know, private sector jobs, I mean, this is a soft labor market, but it was surprising to some that we actually saw it go down.
There are estimates on what the ADP report is supposed to come out at, and the estimates this round were to be positive 51,000. So when you see a decline of 32,000, and it was focused on the smaller businesses in particular, as you mentioned, it's a bit concerning. And this is more data that we know we have a weakening labor market, and the rate of growth is continuing to slow. And so that's a big concern. We do want to look to that report that will come out whenever they get through this in terms of the shutdown. They'll release the data if it's after Friday because we have it. They'll just let it out. And what you want to look for there is you want to look for plus or minus 80,000 jobs to the positive and to keep the unemployment rate still at 4.3. That's what we're kind of turning to, and we want to see that when it comes out.
The other thing I was thinking about, it was kind of a follow-up on a conversation you and I had yesterday. Remember, we were talking about like the big picture implications or the possible impact of the shutdown on the economy, is that if you're cutting jobs already in the private sector, as this ADP report shows, and now if the president and the administration follows through to not only furlough federal workers, but cut some jobs permanently, then you might have a public sector problem on top of that in a soft labor market. What would you say?
Yes, you could. And so the ones that, the government jobs that are the ones that get furloughed, a lot of those jobs, it's just a pause on their pay. Right. They do get that back pay. So that's
why now they're saying they might go further. That's what like Russ Vought, the OMB director, says, well, okay, no, we're actually going to cut these jobs. That's in 2 or 3 days.
And a lot of those jobs, if you remember, a lot of them were scheduled to end on September 30th anyway. So we haven't seen the impact of that. We won't see that until next month anyway. So there could be an impact in the short run on those people, presuming they haven't found other careers and haven't found other jobs at this point, and maybe some of them have. So you're going to have a short-term impact there. But I think what they're betting on is that the midterm part after that is going to snap back to some good degree. It's not going to all the way come back. And then longer term is really what they're in it for here. So I think if they feel like in the short run, like any company, if you will, that needs to right size in the short run so that in the long run they have a more viable business. I know that doesn't directly translate to the government, but that's the concept here. I think that they're trying to do. Of course, the people impacted, that's the ones that are going to feel it the most.
Right. There's always that caveat. These are human beings that could lose their jobs, and that's tough on them. We're sitting here talking about like macro economy and all the rest, or the stock market. It can seem insensitive to people, but that that it's important as well. I think that we talked yesterday about separating the stock market and the economy in these, and I think it's important to kind of do that because you could have a hit to GDP and the market could go straight through the roof. Like today, first day of the shutdown, it's not through the roof, but the market's higher. And it's the first day of a new quarter. So how do you look at the stock market in the midst of this? Say we stay shut down for a month or so. I don't know what's going to happen. But how does the stock market perform? Usually in the last quarter of the year, and remember, it's already been a good year for stocks, market does pretty well.
Well, yeah, so here's what happens. Like, well, today, this morning, you woke up, it's like, oh, if this is longer term, and the market kind of sold off a little bit, then it's sort of, everyone felt like, well, this is going to be short term, and so the market came back, and it's slightly positive. But what you're also in here is if you look at the market into sort of six-month increments, and you're talking about the sort of May 1st through the end of October, and then November 1 through the end of April, those two different parts, you're in the weaker part here. September and October are two of the weakest months of the year. But then it does turn. So November 1 begins the 6 months where you get 80 to 90% of all of the return in the market. So if we can get through this and the November kind of launches, it's going to be very difficult to get another 20+% year this year, although year to date on the S&P, we're up 15, which is phenomenal. So I do think with a little bit of weakness here in the month of October, which wouldn't be unprecedented, you could set yourself up for perhaps the next move. And that's when you get around to May, when you hear that sell in May and go away, because that May to October period is not the best 6 months of the year.
All right. Thank you, Doug. As always, Doug Flynn. I'll show you the closing number.